Welcome to your trades the week ahead, and what a manic week it has been. Not just the volatility but the weakness that the market has seen. A 4% downtick coming in, and on Friday we had a sub 56.50 close.
Yeah, classic death trap though for the traders, because you get whipsawed on either end, and in the end you end down close to 3.5% for the large caps. More importantly, like maybe multiple percentage points on the mid caps, and that was the boiling point.
Oh yes, that it sure was. The mid-cap index, that ended up losing about almost 5% coming in there. And more importantly, it was the small caps which lost a good nearly 7%. But you had the Bank Nifty as well, which knocked down 5.5%. The biggest dragger though for the markets this week have been the Realty pack. So the Realty index lost about 13%. Downtick coming in for the real estate index. JP Associates, Tata Steel, IDFC, BHEL, Punjab National Bank, BPCL, ACC, SBI and Maruti have been the biggest laggards for the markets.
Yeah, not too many gainers. Stocks in news, yes, Tata Motors or HUL, and we'll discuss them. But in the mid-cap space as well, tons of these stocks falling apart. Mid-cap real estate was taken to the cleaners, HDIL being the one which comes to the top of the mind. Sugar, again, got clobbered in shape by virtue of the fact that no decision on the decontrol came about. So all of these stocks or all of these sectors didn't have the best of sessions for the last 3 or 4 days, and which is why they formed the list of the top losers in trade. The question mark really being, what do we do next? Do we bounce back from these critical levels of 5650, or can we see more weakness before the earnings come in? Mind you, it's expiry week, but it's a truncated one at that too. Let's get in our experts, two men best equipped to talk about the charts as well as the futures and options expiry. Dr. C.K. Narayan and Mitesh Thakkar join us on the show. Gentlemen, thanks so much for joining in and taking the time out. Dr. Narayan, to you first. And what to your mind do we do next week? We are at critical levels, so to say, 5650, 5700 odd, expiry as well. How would you trade the market?
See, we have been looking for various levels of support, right? We keep marking them down, 5750, 57, now 565. 5650. The key point is that if something is to act as a kind of a support, then the prices should bounce from there, and that bounce should not be just led by some short covering, but it has to happen from genuine fresh buying. Now we drop down into these various levels, and as we did into 5650 during the week, but at no level do we see any kind of fresh buying actually coming in. In fact, this week has been particularly bad, because if you take let's say the future space with advance decline, you got only 9 advances compared to something like 140 odd declines. That's like a complete decimation of the bulls, right? And even this has spoiled the figures for the month. The month actually started fairly decently in March, but I think we are down to a negative in terms of breadth as far as the month is concerned. More importantly, I think every sector, if you without exception, has various stocks which have got, which have recorded losses which are in excess of 10%, or even going up to 20 and 23%. So I think bears are fully in control. I don't think we should be really looking for any trade other than short. If we do get some signs of bottoming and fresh buying or bottom fishing, then we will know, maybe by Monday, Tuesday. But with a truncated week ahead, I don't think we are going to see it.
Mitesh, the question really would be, after the 7% downtick that we've seen in a stock which most people consider to be the best play in the auto space until recently, can it go down more, or could there be a contra move?
I would possibly bet on a significant more downside happening from current levels. I think one, it's kind of broken below important weekly pivot points, which is 280, 275 was a important support. It's also broken down a weekly rising trend line and a narrowing channel on the medium term charts. My sense is that, while with some volatility might happen over there and you might get pullbacks to about levels of 280, 285 on the upside, I think that should cap it up. And on the downside, I think the minimum I would expect the stock to hit would be around 248 to 47. With possibilities of 233 also coming into play. So I think I would be negative on Tata Motors, and I think on a 3 to 4% kind of price would look to short this stock.
Dr. Narayan, it's been exactly how the market has been, whipsawing traders on either side. But how do you trade Bharti Airtel going into next week, considering that it's expiry as well?
Futures traders have not really participated in Bharti in any significant way, in the sense that they have built up long positions. If you look at the positions in futures, they have actually whittled down to about a third of what it was near the peak, which was about 2.5 crore shares in terms of OI a few months ago, and now it's down to about 75 lakhs. and the OI has been coming down. So what you saw was some sort of value hunting at the level of 230, 240, which pushed it up fairly well to about 350, 375 region. I don't think Bharti is really cutting it right now. The flow of bad news is not doing it any good. I think we'll revisit about 260 levels very shortly, maybe around 250 levels also. That is where I would look at it again.
Mitesh, how would you trade now, Unilever?
I've been positive on the stock. In fact, trying to recommend buying into it, and also, to our clients around the levels of 460 to about 457. I think it's close around those levels as well. My sense is that the stock is, after going through correction from levels of around 550 to about 430, I think clearly giving signals that an important bottom has been made. And I think now I would keep a stop below 450. Look for a bounce back to the first levels of around 477, 478, with possibilities of 500 also being tested over here.
TK, out of HDIL and Renuka, which is looking weaker?
You mean to buy? I don't think I would want to buy either. HDIL definitely does not qualify as a buy. What do you say to a stock which is breaking down into long-term, all-time new lows in, let's say, multi-year lows? I don't think anybody should go near it with a barge pole either. And similar is the fate with Renuka. I don't think it has ever really got up from the head post all those initial euphoria about a year ago. I think this is another stock seeking new lows. So I think I would just say leave these two stocks alone. Forget about any kind of bottom fishing. You're just writing a suicide note if you're trying to buy these.
Let's quickly then tell you what trades to execute come Monday morning. Mitesh, start off with you. What trading calls would you recommend?
So I think, very clearly, while the market has kind of come closer to support, I think a lot of stocks are freshly breaking down, and I've identified two of them which look very weak on the charts. United Spirits of McDowell's, which really hasn't fallen with the market and now is, showing signals of some kind of significant price correction coming in. But the confirmation happens once the stock price trades below 1840 on a daily closing basis. So sell below 1840, keep a stop at 1880 or just above that. Look for a first price target of 1765 over here. The second one is a sell on IndusInd Bank with a stop at 410 for a target of 380.
Okay, watch out for those two. Dr. Narayan has a buy and a sell. And Dr. Narayan, the rationale, M&M has been one of the stronger auto stocks. You recommending selling this one?
Yeah, I think the news flow in it has been a little negative, and the stock is not, it has held back among the auto set, but I think it's ready to go down now. It closed down weak for the week as well. I think around 870, 875 is where I would recommend a sell, because I'm seeing a target down during the week till about 840, 845. So I think that's a reasonable amount of profit on the annual. 890 should be used as a stop. I have a buy in Divi's Lab. Divi's has dropped down to a level which was the previous high back in 2007. Found some willing buyers there. So at about 1,000 rupees with a stop at about 990 or at worst 985, I would recommend a buy. Look for about 1,045 on the upside during the week.
Okay, let's also chat about what lies ahead for commodities as a back. Manisha is here to list out the cues for next week. Manisha.
Another eventful week, and starting with gold, that's headed for a biggest weekly rise in last 4 months. There it's trading at a 3-week high. The support has been coming in from concerns on Cyprus that the crisis is supporting the buying into safe haven. Apart from that, you also have seen physical buying continuing to come in from Asia, the central bank buying and the Indian buying ahead of the wedding season as well. The pressure though continues from ETF redemption. For the coming week though, you might be looking at gold prices trading between $15.80 on the lower side to $16.25 per ounce on the higher side there. Copper prices in the meanwhile are posting their biggest weekly decline in last 4 weeks. You have seen the LME copper stocks hit their highest in last 10 years. Also the Europe concerns, the weak Chinese buying, all of that has been putting pressure on the prices. Sell on rallies is a strategy coming in from most brokerage houses. Another 2.5 to 3% of a decline in the coming week has been speculated for most of the base metal prices there. But there has been a turnaround in case of the iron ore prices. Those are trading off their lows there. Still a 5th weekly decline coming in for this space as well. You have seen China's buying on lower side is something that has been supportive for the prices. Watch out for the steel prices as well as they post their first weekly gain in last 6 weeks of decline.
Okay, Manisha, thanks a lot for that. Just before we wrap up the show, we just figured out one segment that we haven't addressed, and mid-cap real estate or real estate in general has had a dismal week. HDIL, yes, but a couple of others too not doing too well. Mitesh, just one final word really on a DLF, for example, down 2.5 or 3% in Friday's session, looking weak along with the other real estate names. Can it slide down further?
Neeraj, is close to support areas. 225 is a 200 average. I think you might see some support over here, but there's a big breakdown which has happened on the weekly chart, which means that eventually the stock will slide below these levels. Or maybe you might see some kind of short covering happening around over here at 225 odd levels. I think on bounce back 245 to about 246 would be very difficult level for the stock to get past, and I think that's the best level to initiate a fresh short position. So I think wait it out for some kind of bounce back. We are oversold as well as markets are also quite oversold and closer to their important support levels.
Dr. Narayan, the other one being JP Associates, again a stock which has been beaten down and clobbered out of shape. Is it at levels from where it can bounce back, or do you believe it can slide down further?
I don't think it can really bounce back, because what you have to note is that along with this huge price decline during the week, it has also picked up substantial amount of fresh additional OI. I think the OI went up almost 50% during the week, which is really sizable. So I think a lot of shorts in there, unless you have some major news break which forces all these shorts into trying to close it out. I don't think JP is really going to cut it. I think it's just falling off traders' radar, and it's going into the ambit of professional traders who keep these things as short against their other long position. So I don't think JP is also worth trying to prospect for a bottom.
Great. Gentlemen, Dr. C.K. Narayan and Mitesh Thakkar, thanks so much for joining in today and giving us their perspectives. But that's it on this leg of Your Trades from Aisha and myself and the team that put the show together. Thanks so much for watching.